Okay, again, we're going to be doing a little bit of theory again. IAS 18, as with all standards, has some very specific paragraphs towards disclosure. So when I'm discussing disclosure, I will be referring to paragraphs 35 and 36 of IAS 18. So paragraph 35 is really where the meat is at. It tells us that we must disclose the accounting policy adopted for the recognition of revenue. Okay, and then it tells us that we must disclose the amount of revenue from each significant category of revenue recognized during the period, and it splits them out: revenue from sale of goods, rendering of services, interest, royalty, dividends. Last but not least, please don't forget, they also tell us that within this revenue disclosure, we must also tell the users the amount of revenue that arose from exchanges of goods or services, your barter transactions. Okay. Paragraph 36, nothing to write home about. Paragraph 36 just highlights that there is often a link between contingent liabilities and assets and revenue, but contingent liabilities and contingent assets must be disclosed in terms of IAS 37. Okay. So quickly, just some illustrative, a very basic set of illustrative accounting policies here. You may have revenue from sale of goods consists of XYZ, wholesale and retail sales to customers, excluding VAT and agency commissions. Guys, you need to tailor this exactly to your client or the question that you're dealing with. Okay. Then there may be revenue from rendering of services, represents the value of work performed to date. We need to tell the user how the percentage of completion is calculated. And then royalty revenue, recognized on the accrual basis. You'll do the same for interest on the time proportionate basis. And dividends, tell the users that only recognized when the shareholder's right to receive the dividends is established. Okay, very simple. Then you need to do a little table. You can either do a separate revenue note. Sometimes I've seen this disclosed as part of profit before tax. Use your judgment. Preferably, if in doubt, do a separate revenue note. Okay, and you tell me revenue comprises of the following components. Remember, current year and prior year, the comparatives. Okay, tell me sale of goods, services rendered, royalties, interest, dividends, whatever's listed there. And you give me a total, and this total must reconcile to your statement of profit or loss. Okay, and then I said within this amount, included in revenue from sale of goods, I said in this example, is an amount that arose from exchange of goods or services for building repairs. Okay, the exchange was of the similar goods and therefore resulted in recognition of revenue. Okay, so you don't do a separate, pull the figure out and remove it from revenue. You just tell the user within the revenue figure is an amount that was resulting from exchange of dissimilar items. Okay, I hope this has given you a starting point. Please look through some sets of financials from listed companies to get a more detailed view on what revenue should be disclosed as, and make sure that you go and look through the illustrative examples or illustrative set of financials in your IFRS books. Thank you.